Hello, traders. Gary Wagner here. Approximately 1 o'clock in Honolulu, 7 o'clock in New York on Tuesday, 12th day of October 2021, and this is the daily report for gold and silver. We saw fractional gains in gold, about a $4.50 rise. Silver did close lower along with palladium. The only other metal to close higher on the day was platinum. We had weakness in U.S. equities. All of it is related to tomorrow's CPI report to indicate if we still see mounting inflation, because that, of course, will set into motion a lot of actions by the Federal Reserve and delay some of the actions by the Federal Reserve. We'll talk about that in our opening letter, and we'll look at some charts. With the inflationary pressures continuing to mount, currently at record levels, at least since 2008, tomorrow's CPI report will be critically important because it will really shape where U.S. equities go, as well as the safe haven aspect of gold. In response to that, we saw gold rise by $4.50, about 0.25%, currently at $1,760.20. Concurrently, we saw dollar strength. The dollar gained about 0.2% and is currently fixed at 94.52.5. The only other precious metal to show a gain today was platinum, $1,007.90, while silver and palladium both closed lower. Silver lost approximately 10 cents in trading, 22.56 basis the December contract, and palladium gave up over 3%, almost 4, and is currently fixed at $2,000.39. All three major stock indexes closed lower. The Dow Jones Industrial Average lost 117 points, currently fixed at 34,378. The NASDAQ Composite had nominal losses, 0.14% at 14,465. And lastly, the Standard & Poor's, 0.25% lower, 10 points, 4350.65. Tomorrow's inflationary report, the CPI data for last month, could definitely result in increased bullish market sentiment for gold. And there hasn't been much bullish market sentiment. It did hit a low of about 1727. That was back at the end of September, but it stalled at approximately 1767. And that really is based upon the 61.8% Fibonacci retracement. The data set starts at the double bottom that occurred in March up to these tops that occurred at the end of May. Now, the strongest level of resistance right now, or most current, has to be based upon the 21-day moving average. That is currently at 1758, and the market is trading just right around there. Above that is 1777.80. But the key is going to be what the data reveals, because we are at record levels not seen since 2008. And although the Federal Reserve maintains that the majority of the inflationary pressures are transitory, there are many analysts, including myself, that believe that a large portion are not. And what I am referring to is energy and food costs. Obviously, the bottlenecks that are caused by supply chain issues, as well as labor shortages, those will be transitory. But the cost of food continues to go up, the cost of oil continues to go up, and I don't see that changing dramatically to affect major components of the inflationary index in the CPI. We are roughly double the level that the Fed has accepted as their target, 2%. We're at 3.8%, I believe, on the PCE. We are at 5.3% on the CPI after going as high as 5.4% the prior month. The key is this. We are clearly approaching the numbers reached in 2008, and in 2008, that was the highest level of inflation in 17 years. It would take a fundamental event like that to take gold out of the doldrums and the bearish pressure we have seen and move it to higher ground. One interesting aspect of the financial markets today was that gold gained ground concurrently with dollar strength The US dollar index gained 0.21%, about 19 points. And I have a horizontal line representing the highest trading point last year in November. And you can see that we have exceeded it at this point. The former highs that came in, there's really two of them. One occurs at around 93.50, and the other one occurs just above that. But we are certainly in record territory in terms of dollar strength. A continuation of rising yield would be supportive of that continuing. This is me, Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.